What do you mean by amalgamation of the firm? Now friends, amalgamation means what? Whenever the new firm is formed to take over the business of the two or more old firms, that is called as the amalgamation. Sometime what happened, some two firms, they are doing similar type of business and they have a strong competition, and in our market they have a maximum amount of share and they are doing the business very well, but both are competitor each other, and therefore they share their profit. They are strongly competitor each other. For example, suppose ABC and company and DEF and company, these two firms are there. They are doing similar type of business, both are competitor. Now they decided to form new firm, new organization, and new organization is XYZ firm. It means it is a combination or merger of two firms. It is called as a amalgamation. The amalgamation means combination or merger. Now, in the amalgamation of the firm, two firms come together to get various advantages such as economies of the large scale production, avoid the competition, and increase the efficiency and expansion, and so on. Therefore, two existing firms decided to come together and start a new firm that is called as a amalgamation. A simple meaning, two different firms come together and start new firm that is called as a amalgamation of the firm. So what are the advantages of the amalgamation? They reduce the competition. They can do the business in a large scale. They can expand the business and they can increase their efficiency because of the amalgamation. In this particular example, ABC and company and DF and company, these two different firms come together and start a new firm XYZ. Just Miss Poonam Chavan, switch off your. I don't think you are disturbing others because here we are conducting the lectures, and why you are not considering the importance here. Amalgamation of the form. So what do you mean by amalgamation of the form? Amalgamation means the combination. We have to avoid our competition. We have to increase the efficiency, and firm can combine in two ways. In the first way we have discussed, ABC and company and DF and company come together and start new firm. So this particular new firm is called as a purchasing firm, and these two firms, ABC and company and DF and company, they dissolve their business, they shut down their business. So this firm is called as a vendor firm or old firms. These two firms, they were shut down their business, they were closed their business, and they start new firm, new organization, and it is called as a purchasing firm, it is called as a new firm. And in our example, XYZ firm is a new firm. Fine. Now Sometime what happened, whenever the PQR, PQR and company purchase the business of ABC and company, one organization purchase to another organization. One organization purchase another organization. It means one partnership firm purchase, take over another partnership firm. One organization or one partnership firm take over to another partnership firm. So it is called as a absorption. It is called as a absorption. It is called as a absorption. So in absorption, an existing firm take over the business of another existing firm. One existing firm take over the business of the another existing firm. So it is called as a absorption. Now friends, absorption comes under amalgamation. Absorption comes under amalgamation. There is no different in amalgamation. Both are same, but terms are different. Whenever the PQR company purchase, take over ABC company. So PQR company is called as a purchasing firm, and ABC and company is called as a old or vendor firm. In this particular example, we can say that it is an absorption. Absorb means purchase, buy, take over. Whenever the one firm absorb another firm, that is called as a absorption. Whenever the one firm absorb or take over, purchase, acquired another existing firm, it is called as a absorption. The absorption term also comes under amalgamation. Now we have to study accounting procedures in the books of old firm. Old firm is vendor firms. Now what happened if I take over any particular firm? If my firm take over the another firm, so whenever the take over, the, those vendor firm or old firm dissolve their business because of the absorption, because of the merger. And whenever they dissolve their business, what kinds of ledgers they will prepare for dissolution, that we are going to learn. You know about the dissolution of the firm, what kinds of ledgers we prepare, similar type of ledgers we will prepare whenever the we will talk about the old firms procedure, accounting procedure. So following accounts are open: vendor firm, open realization account, partners capital account, cash and bank account. If not taken over by the purchasing company, then we will prepare separately cash or cash and bank account and purchasing firms account. So these are the accounts vendor firm or old firm prepare whenever they want to close their business. You studied in the dissolution of the firm. Whenever the firm is dissolved, similar type of accounts they were open. Same way, the vendor firm also dissolved under amalgamation. Therefore, they will prepare these accounts, that is relation account, partners capital account, cash and bank account, and purchasing firms account. So it is very important whenever we will talk about the old firms books of records. So we should know about the what kinds of accounts they will prepare, and we should know about the how they will record these transactions. So we should know about the general entries of the old firms. We should know about the general entries posting also. So we will discuss the general entries in the books of vendor firm or old forms. Okay, do you have any doubt regarding any kind of things what we have discussed today? So see friends, now we will discuss the today general entries in the books of vendor form. General entries in the books of vendor form or old form. Now, what kinds of general entries pass by vendor firm or old firm whenever they dissolve their business? Because new firm take over their business. Sometimes so two existing partnership firm come together and start a new business. Whenever the two existing partnership firm come together and start a new business, it means two existing partnership firms dissolve their business. Whenever the business were dissolved, what kinds of accounts they will prepare, what kinds of general entries they will pass, that we are going to learn. Unless and until you are not study the general entry, you can't understand the ledger and you can't understand the posting also. It is very important to study the posting part of our vendor form. And whenever we should know about the vendor form posting, so first of all, we will discuss the general entries of the vendor form. Now, friends, whenever the vendor firm dissolve their business, they will prepare a realization account and they will transfer their assets to the realization account. So, transfer asset to realization account. So what will be the entry we have to pass? So it is very simple entry. Realization account debit to sundry assets account. Now sundry asset means what kind of assets? Fixed asset, goodwill, investment, current assets, and loans and advances. These are the assets we will put under realization account. And therefore, whenever the cash or bank balance are transferred if they are taken over by the new firm. If it is taken over, then cash or bank balance also transfer. If the goodwill account appear in the books, it too is transferred along with the other assets. Gross value of the debtors transfer to the debit of the realization account, and reserve and provision for doubtful debts is transferred separately to the credit of the realization account. Now, these things you have to keep in mind. This is the first entry for our asset transfer to realization account. Now, second entry, whenever the asset transfer, we will transfer our liability also. The next entry, that is transfer of the liability to realization account. So it is exactly opposite entry of our assets. The entry will be sundry liabilities account debit to realization account. Sundry liabilities includes secured loan, unsecured loan, and current liabilities, but excluding loan from partners. Loan from partners we will not consider under this transfer of the liabilities. I hope you understood what is going on. Now, friends, next is we have to find out the purchase consideration. Now, purchase consideration means what? The amount payable by purchasing company to the vendor firm. Amount payable by purchasing firm to the vendor firm. Why they are paying this full amount for taking over its business. Whenever the purchasing firm pay certain amount to the vendor firm or old firm. Why they are paying? Because of firm for taking over its business. Vendor firm's business take over by purchasing firm. Therefore, Purchasing firm give certain amount, and such amount is called as a purchase consideration. Purchase considerations entry we have to pass purchasing from account debit to realization account. Purchasing from account debit to realization account. Yes, friends, I hope you understood the third entry. It's very simple. Now, next entry that we are going to learn. Whenever the at the time of amalgamation, asset take over by partner, whether such asset is recorded or unrecorded. So entry we have to pass partner's capital account debit to realization account. Partner's capital account debit to realization account. When we pass this particular entry, whenever the partners taken over an asset, whether it is recorded means it is recorded in our balance sheet. Unrecorded is it is not recorded in the balance sheet or any books of records. So these are unrecorded assets or recorded asset. If it is take over by the partner is ready to take over the assets. The entry will be partner's capital account debit to realization account. Then friends, whenever the liability taken over by the partner, whether it is recorded or unrecorded, it is exactly opposite entry. If the liability take over by the partner, entry will be realization account debit to partner's capital account. One thing you have to keep in mind, we are studying general entries in the books of vendor form or old form or dissolve form. Therefore, these are the five entries we have to pass. Some further entries also there. Next entry, whenever the payment of liability expenses on realization, whenever the firm dissolve, at the time of dissolve, at the time of liquidation, we have to make certain payments. Such payments we have to record. Such payments we have to record. The entry will be realization account debit to bank account. Payment of the liability, expenses on realization, recorded or unrecorded. Such recorded or unrecorded liability paid entry will be realization account debit to bank account. Yes, I hope you understood what is going on. It is very important to understand the general entries because all general entries are equally important. Okay, fine. Then after that, you should know about the general entries part. Next general entry, sale of assets, whether it is recorded or unrecorded. At the time of amalgamation, assets sold by the vendor firm, entry will be cash comes in, the cash or bank account debit to realization. Here, liability paid to bank. Then asset sold, cash comes into cash account debit. Here, liability paid to bank or sold of the asset, cash account debit. These things you have to keep in mind. Then friends, next general entry that we are going to learn, profit on realization. It is always transferred to partner's capital account. So entry will be realization account debit to partner's capital account. Whenever the profit is transferred to partner's capital account, similar way, loss also transfer. Loss will be transferred to realization account. So exactly opposite entry. So entry will be partner's capital account debit to realization account. Partner's capital account debit to realization account. Then friends, next general entry, accumulated losses. Accumulated losses, preliminary expenses. It is recorded balance sheet asset side. Uh, Formation expenses. These are the expenses or for capital acquisition expenses. These are the items recorded asset side or fictitious expenses. These are the accumulated losses. Accumulated losses we have to show partners capital account. Partners capital account. The entry partners capital account debit to profit and loss account debit balance. Debit balance means net loss. Debit balance means net loss. So net loss we will transfer to partners capital account, and it is there in balance sheet asset side. Loss is recorded balance sheet asset side, and this asset side loss we have to show in this particular general entry, and we will transfer to partners capital account. Any deferred revenue expenditure is there, it is also transferred to partners capital account. Deferred revenue expenditure, for example, research and development expenditure, some advertisement expenditure, which is used for future period, such losses that we have to put as the accumulated losses, and it is recorded partners capital account. Now, accumulated profit also transferred to partners capital account. Accumulated profit means net profit, profit and loss account debit, general reserve account debit to partners capital account. Profit and loss account debit, general reserve account debit to partners capital account. The accumulated profit or general reserve also recorded partners capital account. I hope you understood these general entries. 11 general entries are over. You have to study hard. Okay, so I hope you understood these general entries, 11 numbers. These all general entries I will keep on YouTube. You have to see and you have to write in your notebook. So first and foremost important part is what do you mean by amalgamation? Whenever the two existing company come together and start a new business, it is called amalgamation. Whenever the one company take over the business of another company, it is called as a amalgamation. Why they are doing this? Because they want to reduce the competition. They want to increase the efficiency. They want to expand their business. Therefore, amalgamation do. So amalgamation of the firms, it means only partnership firm. We will not study the company's amalgamation. We will study only partnership firms amalgamation. The partnership firms amalgamation, what kinds of accounts prepared by the vendor firm or old firm that we have discussed. These are the accounts they will prepare that we have discussed. So we should know about what kinds of accounts they will prepare, and it is very important to understand. So I hope you understood this terminology about the amalgamation of the firm. So what you have to do, whatever notes I explain, similar type of notes you have to read and write in your notebook. So next time we will come, that time we will discuss and solve big type of sums. Maybe we will solve general entries and the ledger also. You should know about the general entries of old forms. Now next lecture we will discuss the general entries in the books of new form or purchasing form. That time we will discuss the general entries, and we will discuss the balance sheet after amalgamation. So I hope you understood the today's lecture. Now, whatever slides I provided, you have to write in your notebook. So I will stop right now and start writing. I will put this lecture on YouTube also. So this is your duty to write your notes. I hope you understood. Okay, this lecture is over. Bye.